So I'll just do a quick update here on precious metals and a little bit on the stock market. I've covered all of this in some recent posts on my website, relativestrengthpro.com, but I'd like to do some video updates. I'm going to try to do them about once a week. So this is basically just a recap going into the new year. So silver is still leading the way. As I've said, it's above this November price here, as well as above all of its moving averages. It's looking very strong, but there is still cause for concern. I do think that there could be, a pullback here down into like the 26s, potentially lower, but I do think there's room to scare traders out here and to have some noise and volatility in the coming days. I don't think it's just going to be a straight shot up within a month, just over a month to get from the recent lows back up to the August highs. So just be cautious. I think there could be some noise this week as we start out the new year. In gold, gold is not as strong as silver. It is breaking above many of its trend line, including the 50-day moving average. It's a little bit stuck at the 100-day moving average. It's still well below this fake out that we saw in November that silver has eclipsed. So again, some caution here. This could break out very, very quickly. I think there is room for this to catch back up and catch back up to silver. Same thing with miners. I'll go over to miners. Miners are lagging the most right now. So there are some levels to watch here. It hasn't really made it well above many moving averages, just stuck at the 50, testing it for a third time now. I commented on this past week. Again, this could catch back up to silver as silver makes it back to new highs, but I do think there is a lot of potential, especially with this recent action here where it's not very volatile when you look at it here, but from day to day, going from almost 37 to 35, 4% moves in a day, opposite directions, traders are being kicked off. I do think there is some potential for this to break in either direction. I hope it's up, but I think we do have to be prepared if it breaks some of these resistance levels. There could be trouble short term for some of the metals since it has been rallying, and all the metals have been rallying for over a month now, since about Thanksgiving. So be cautious here. There is some potential that there could be a pullback, but I do think regardless of short-term action, the long-term trend is up because of all the money printing that is being done worldwide. So on to stocks. Here is the semiconductor index, SOXX. So I've said before, SOXX, like silver in metals, SOXX is leading the stock market and tech. I do think that there could be a pullback here as well. At some point there will be, but it's going to be harder and harder to predict as we get into the bubble. I don't think we're in full bubble territory yet, but there are signs. Again, on recent posts, I've talked about the Russell 2000 is obviously in a bubble. Some other indexes around the world, like the Hang Seng and the Nikkei, are both in bubbles and just had a breakout high above some ridiculous highs already. So there is a lot of activity, as well as small stocks, obviously, Tesla, and a lot of other stocks, Neo. I'll go on, but there's obvious bubble activity happening. I think there's a lot more that will go as more large indexes pile on. But at some point there will be a larger correction. So if the semiconductors were to break below where they had a low in early December, I would think that is a point of caution as it consolidates here. If the move is down, if it's not able to continue making higher highs, I don't think a correction will be long, but I do think it will be severe. So a 5 to 10% correction wouldn't be unheard of before this continues higher. And lastly, this is the VIX. I think this is what I've seen the most where bear traders are commenting on this. They keep seeing this trend starting to happen where there's making higher highs and higher lows. They see the one big spike and they want, another one that goes up to 40. And I think this action right here shows potentially the opposite short term. this looks like a complete turnaround, and there could be another spike in the future. But I do think we are going to keep pushing below this green line, which is the gap from the March crash. If I zoom out, so that line is where there was the big gap over the weekend when coronavirus first started having a severe effect on people's psyches and what they thought might happen in the markets. Obviously, that led to a massive crash. That's what people are looking for now, but there just aren't the pieces in place for that to happen, and see it coming anyway. There could be an event that happens overnight, but it's not going to be something that people can predict in the same sort of way. So going back in, I do think that this will move back down before there is a huge, huge spike and we reach the end of this bubble. I do think that we will fill this gap and get down into 17, 16, 15. I don't think it will, make new lows below where we were over this past summer, but I do think, there will be a significant move here. And then just a quick look at the NIMO. This is another one that I watched for turnarounds. This is making a marginal high. I'd like to see a little bit more strength off of this if the stock market were to, make another leg up. No matter what, I'm going to be cautious until there is one of those bigger 5 to 10% pullbacks in some of the indexes. But this is showing signs that a correction might be over, and this may, continue a little bit higher before there's a correction. So if you're interested in following me, this is my website, relativestrengthpro.com. Take a look and see some of my recent blog posts, and also follow me on Twitter at OneTrendingMarket.